So now that we're here into 2026, the big question I've been getting from everyone is whether or not the housing market is going to turn around. And I wish I could say yes, but based on everything I'm seeing, 2026 is shaping up to be another tough year for real estate, maybe even tougher than 2025. Here's a breakdown as to why. The Bank of Canada has held rates again, so there's no cut happening, and the language behind that decision tells us a lot. Their updated data shows the economy is holding up better than expected. Not booming, but not weakening fast enough to justify cuts. Unless something breaks, cuts are going to be unlikely. Markets do agree. They're pricing in basically no relief for 2026, maybe one cut, maybe even a hike. Either way, rates are basically at the bottom. Meanwhile, fixed rates are rising because the 5-year bond yield has jumped about 30 basis points in the last month. That's why anyone with a renewal coming up should be talking to their lender now and not waiting until later. Banks are motivated to keep your business, and renewal rates are often much better than new client rates. And as I'm looking at different mortgage products, variable 3-year, 5-year rates, they're all sitting within 20 to 30 basis points of each other. That means the decision is less about chasing the lowest rate and more about how much risk you're willing to take. And this rate environment is shaping up buyer behavior. Canada's largest brokerage just released its forecast, and even they're calling for price declines in Vancouver next year. Vancouver home prices are projected to drop by approximately 3.5%. Now, when you're looking at inventory, you're seeing a very similar story. Vancouver is sitting at around 8 months of supply. That's a lot of homes that we need to work through before prices start to stabilize. And a lot of sellers I speak with are hoping that spring 2026 will save them. However, the data doesn't support that. Yeah, to give an example, I sold a townhome a couple of months ago in South Vancouver, and now I'm selling another property in the same complex, same floor plan, a nearly identical property for $40,000 less. And that's just an indication of the market that we're in. Now, shifting to the rental market, we're seeing changes there as well. Vancouver's vacancy rate for purpose-built rentals has climbed about 3.7%, the highest it's been in over 30 years. Incentives, concessions are now becoming the new normal because developers who couldn't make pre-sales work have now pivoted into rentals and they're flooding the market with supply. So here's the bottom line. 2026 isn't about relief, it's about adjustment. It's about pricing correctly, understanding leverage, and being strategic. If you're planning to buy or sell next year, book a consultation with me and let's navigate this market together.